record. Right? If you're in this space, anytime you want to take a trade, you're going to have to calculate your risk. All right. So I just want to make sure that you're as comfortable as possible with that and you know how to do it as quickly as possible. All right. So before I move any further, let me know if this is your first ever market mastery session. If that's you, you go ahead and drop a 1 in the chat. All right, Kay, good to have you. All right. And if you going through the academy, if you've watched the video that speaks about risk and calculating pips, then you could definitely let me know. You can drop a 2 in the chat if you've seen that. And you can drop a 3 if you started taking trades, taking some of these signals that came through. And you find that when you go to input the information like the entry, the stop loss, to take profit, that it takes you a while, right? You want to be able to get into the trade faster, but you also want to be cautious and make sure you put everything in correctly. All right, perfect. All right, so my brand new people, don't worry about it. I got you covered. All right. All right, so let's get into this thing. Now, when we talk about risk, right? Risk management is everything that you need to know before you enter a trade, right? These are all the decisions that you make before an alert comes out, before you open MetaTrader 4. You decide all of this beforehand, all right? And the number one thing that you're going to be deciding is how much are you willing to lose? Because in this journey of learning to trade, in this journey of multiplying your money in the foreign exchange market, you will lose. You are going to lose trades. You're going to lose some money. But here in this space with the Run the Play University, we teach you how to lose correctly. Right? If you talk to any wealthy person, anyone that does investing, they always know the risk that's on the table, and they move forward when they are comfortable with what that risk is. If they're comfortable with the risk and the upside surpasses that risk, let's go get it. So here in this space, we teach 1 to 3%. It doesn't matter if you do 1, it doesn't matter if you do 2, it doesn't matter if you do 3. All right. But whichever one of those percentages you choose, you need to maintain it 100% of the time. Do not change it whatsoever. If you do, you're going to mess with your numbers. All right. We want everything here to be as calculated as possible, right? We want everything here to be as seamless and easy for you to move through this space with. All right. So whether it's 1, 2, or 3%, you choose it, you stick with it. Every single time I come on these sessions, I'm going to be speaking from a 3% perspective. 1, it's the maximum risk. And 2, since it's the maximum risk, it's going to be a better place for you to start if you're looking to get your account to grow. Right? Growing by 1% is going to take more effort than growing by 3%. All right. But either way, you got to be comfortable with what that risk is going to be. All right. So what I've experienced is most persons start their accounts anywhere between $150, $300. So for the sake of our conversation today, we're going to be using 200. And for you to follow along with what we're going to do, you're definitely going to need a notebook. We're going to be taking a lot of trades on paper. All right. What I'm going to do is give everybody $200. You're going to have $200 on your account for this class, and we're going to see who blows the account. If you made money, if you're profitable, what? Just by the decisions that you make as we go through this class. All right. All right. So to get started here, I'm going to have to make sure that you get familiar with a couple terms. And this is going to touch on what we did last week. So let me go ahead and share my screen and just confirm when you are seeing it. You should be seeing a PDF. So you can just drop a completed the academy. Awesome. All right, cool. So Kay is seeing it. Wonderful. All right, so the first thing is you're going to be hearing the word pips a lot. Here in this space, pips is just a unit of measurement. All right, so if you're thinking centimeters, inches, millimeters, meters, those are all telling you if you're traveling a certain distance, the meters, centimeters, whatever, tell you exactly how far you went. Here we're talking about pips. And with pips, it depends on the pair that you're trading. All right, when I say pair, we are always looking at what's happening, the tug and pull, the seesaw between two currencies at every time. So it's, let's say we're talking about the US dollar to the Canadian dollar. Those are a pair, right? They're always put together. Here on the screen, you're going to see the euro to the US dollar. That is a pair. If it's a Great Britain pound to the US dollar, also a pair. Gold to the US dollar, that's a pair. All right. So if that's clear, just put an AC in the chat. That's what pairs are. Now, if we are looking at standard Forex pairs, all right, with standard Forex pairs, the numbers tend to look something like this on the screen, right? Where there's one number before the decimal point, and then there are 4 to 5 numbers after the decimal point. That is how it would show up when we send out the signal. That's what it looks like when you start looking at things on TradingView. The number I want you to pay attention to is going to be the fourth number behind the decimal point. All right. I know some of us, we may not have done decimal since secondary school, but just work with me here. The fourth decimal place, that is 1 pip. So just like it says here, if we had 1.1000 and it moved upward, it increased in value to 1.1001, that's going to be 1 pip of movement. Okay. So here at the bottom, when it goes to 1.1000 to 1.1050, that is 50 pips of movement. All right. So, Kay, I know this is your first class. Let me know if you're following so far. If you are, give me an AC. All right. Let me know if this explanation here, if that was pretty clear to understand. All right. So we're going to be following from this decimal point, the fourth decimal point. If it's the third decimal point, that means we're looking at tens, right? So if there's 5 here, that's 5 tens. So that's 50 pips. If we were looking at this pip, the second decimal point, because I'm not sure if you're seeing my mouse on the screen, then this will be 100. So if this moved from 1.1000 to 1.11, that will be 100 pips, right? That's the movement. Now, knowing the distance that you're traveling is going to be important because that is one part of the equation when you're trying to figure out how much money you're actually going to make. Okay. So that's pips on standard Forex pairs. So if you're writing anything in your book, you could definitely write that down. This is also in the academy. Now, there are some special pairs, which is the Japanese yen pairs, which is going to be written a little differently. All right. There are 3 numbers before the decimal point, and then they're usually 2 or 3 after. All right. So in tracking the pips, you're going to be looking at the second decimal point. That's going to be 1 pip. And the same thought process is going to apply. So 110.00 going to 110.01 is going to be 1 pip of movement. 110.00 to 109.5, that's going to be 50 pips going down because it decreased in value. All right. So once again, before I move off, just let me know if you're completely clear. Okay, specifically, you let me know, but everyone else on the call, you let me know as well. All right. So JPY pairs are going to be different to the standard pairs. All right. So that's the main difference between the two is where the pips are going to be calculated from. All right. While you are still a beginner and you're taking the trades that we send out through the live signals chat, the pips are going to be calculated for you. All right. So that's one less step for you to have to try to figure out. But as you grow and you learn to trade on your own and you learn how to read everything on your own, then this is going to be very, very important. All right. So we're going to keep it there. Now, the next thing, the next part of the equation is going to be your lot size. Now, the lot size is this taps into what happens and why we want to use a broker account. Usually, you can't trade in the foreign exchange market. Well, actually, historically, you couldn't trade in the foreign exchange market without hundreds and thousands of dollars. But thanks to a broker, all right, we are able to tap in digitally. And using these three lot sizes, we could tap in on different levels. All right. The first level where you're going to be spending some time is the micro lot level. All right. This is where you can buy or sell 1,000 units of the currency. And this starts at 0.01, and this is going to go up to 0.09. All right. That's that lot size. The value, I'll slow down a little bit here. The value of each micro lot. All right. So every number between 0.01 to 0.09, this is going to be 10 cents. So 0.01 is 10 cents. 0.02, 20 cents. 0.05, 50 cents, so on and so on. So 0.09, that's going to be 90 cents. Okay. So, and that is going to be per pip. All right. I promise I'm going to tie this together. So just follow me for now. So for the sake of the conversation, we're just going to stick here on the micro lots. So if our trade moved up by 1 pip, all right, then you would have made 10 cents. If it went up by 2 pips and you're using 0.01, you would have gotten 20 cents, right? 10 cents for every pip movement. So when you enter a trade, your lot size can change. All right. Obviously, if you change the lot, that also affects your risk. But I'm going to tie this all together for you. All right. So if you're writing for your notes, a micro lot, 0.01. 0.01 is worth 10 cents. A mini lot is a 0.10, and that is worth $1. Okay. And then the standard lot is a 1.0, and the dollar value for that is $10. So here's what that's going to look like. All right. Here's what it's going to look like. I want you to write down in your book, just write TP1, right? Which means take profit. TP1, 30 pips. All right, write that down in your notebook, your laptop, your phone, whatever. When you got that, once you have that written down, put done in the chat. TP1, 30 pips. All right, TP1, 30 pips. Awesome. So what this means is if we enter the trade right now, our take profit one was worth 30 pips. If you enter that trade on a micro lot, which is 0.01, all right, you would gain 10 cents for every pip. Since the trade traveled 30 pips, that will be 30 pips multiplied by 10 cents. All right, if you're talking about how much money you make. All right, so 30 by 10, $3. All right, if that's clear, drop an AC. If you took this trade and you got take profit one, you would have made $3. Now, if K, she went through the, sorry, I don't even know if you're a she, I just assumed. Sorry, my bad. So K, if you took this trade, you were using a mini lot instead, right? This means that you're using $1 per pip. All right. You would get $30 from this same trade. Take profit one is still 30 pips, right? But because you use the mini lot, you don't make $30. Now, as you grow, your understanding is great. You're in the advanced class of Kai. You use a standard lot instead. Drop in the chat how much money you would have made from that trade. 30 pips is the take profit. You're using the standard lot, right? Let me know what you think. How much money you would have made on this trade. All right, perfect. Perfect. Now, here's the deal. The lot size is another part of the equation, right? So we have the pips, you have the lots, right? But we still need to take account for our risk, all right? Because we want to make sure that our risk is within that 30% range. All right. So what we try to do as the person sending the signals out for you guys is we want your take profit 1 and your stop loss to be as close as possible. The stop loss is always going to be 3%. So if your stop loss was 30 pips, that means that you could potentially lose $3, $30, or $300 on this trade. Take profit 1 was $3, $30, or $300 based on which lot size you used. All right. Now, this is a simplification just to keep the numbers easy, but a mini lot, remember, you could use anywhere between 0.01 and 0.09. All right, but we're just keeping it simple for now, so you get the principle. All right. So the risk, your risk, if you're writing in your book, the balance that we're going to be playing with is $200. Your risk per trade is going to be 3%. Let me write this down. So balance, balance, $200. Risk per trade is 3%. And that in dollars will be $6. Right? Risk per trade is 3%, which is $6. And your risk per day is going to be 9%. All right. So that means you could lose $18 for the day. All right. So if you're taking notes, our hypothetical account that all of us started with is $200. We are immediately okay with losing $6 on a trade. And if for whatever reason we took 3 trades and we lost $18, we are done for the day. All right. We live to trade another day. So 3% per trade. We took 3 trades. That's 9%. All right. Good stuff. All right. So let me show you guys how we are going to be able to calculate your risk. All right. To make so that when a trade comes out, you'll be able to see, okay, is this something that I can take? All right. Because part of being a phenomenal trader, you got to be able to know when to ignore a trade, when to say, all right, I can't take that one. It looks great, but my account can't handle it. So I'm going to leave it alone. I'm going to let it go. It's much better. Sometimes the best trade is no trade because your main purpose is to protect your capital. We don't go here just throwing around money because we think the upside sounds good. The risk is more important than the profit. Okay. Now, for my newer individuals, there are 2 other things we need to know: the stop loss and the take profit. All right. Stop loss. This is something that you can set when you're trading using MetaTrader 5. The stop loss is what is going to automatically stop your loss, stop you from losing. So you can literally say like, hey, on this trade, I have $200 on my account. You can set a point that when it reaches 3%, when it reaches $6 in value, you are out of the trade. Right? That's amazing. You can also set what your take profit is. The take profit is the level where you're going to be taking your money out of the trade. When it hits this level, you are good. So let's say you're risking 3% and you're looking to gain 6, right? So you're risking $6, you're willing to lose, and you're saying like, if I got $12 in this one trade, I am good. Right? Now that's something that we can do. So that's the stop loss and the take profit. These are all part of what you're going to be focusing on as your risk management. The first thing is how much are you willing to lose? The next thing is what is your target? What are you looking to gain? As a beginner, I like to say 3% per day is great. That can change your life if you're consistent with it. But better than 3% is 6%. All right. All right. So here we are. Calculating your risk. All right. We're using simple numbers like 200 and we have the 3%. So you would know what the dollar amount is. But now the part that gets tricky is being able to translate the dollar amount that you're willing to lose into the lot size that you're going to have to lose. Can you bring back that screen? Which one? The one with the stop loss? All right. Hold that there for a second. All right. We good? We got that covered, Sky? I'm gonna call you Sky because I don't see your name there. Or you can take a screenshot and get that later. But this is also on the first page of the Academy has this PDF. It's just a little harder to see. You just got to scroll a little bit. All right, perfect. All right, so like I was saying, step by step calculation of your risk. All right, so determine your dollar risk. We already did that here. Right, we know our balance is $200. We know our risk per trade is going to be 3%. Right, and then you got to determine what your stop loss is going to be. We're going to do some examples here just to make sure we got it. All right, so determining your lot size is going to look like this. Your risk per trade, right, divided by your stop loss. So we have $200 on our account. Let me get my book. It's the wrong book. $200 on our account divided by the stop loss. For this conversation, we're going to say the stop loss is 30. All right, so the risk per trade is 6. So you're going to put your $6 over 30, right? Multiplied by the value of a 1.0 lots, which is 10. All right, so 6 over 30 multiplied by 10. Is that right? 3, 2. All right, let me make sure that this makes sense. Six, 3. Oh, all right, sorry. So it's 6 over your stop loss multiplied by 10. So that would be 6 over 300. All right. Read it a little wrong there. So let me see. All right. So you should really have, let me type this up. You should end up with your risk per trade. Just imagine, all right, I'm going to draw a line here. Risk per trade. So this is 30 multiplied by 10. All right, so it should look like this. I had my multiplication side on the outside, which would have been, you would have got 2 if you had it on the outside. All right, so risk per trade over whatever your stop loss is for this conversation. It's going to be 30 pips. And that 30 multiplied by 10, all right, which is going to be 300. So 6 over 300. And that should give you 0.02. All right, feel free to use your calculator app. It's completely fine. I actually had mine open here. Let me pull that back up. Let me know. Did you guys get 0.02? All right. Now, this is how we check it now. This is how we check it back. 0.02, that's our lot size. Remember I told you when we are looking at I promise this gets so much easier as you go through, but right now, knowing this is going to be critical. All right. When I mentioned the micro lots, 0.01 is 10 cents. So 0.02, that's going to be 20 cents. All right. You got point two? All right, no worries. All right, we'll work that out. Just follow me for now. So we're gonna work this backwards. And the more you do it, the less you're gonna need a calculator to help. All right, so that's 0.02, that's 20 cents. We know that per pip, that's 20 cents. And we know that the trade is going to be 30 pips. Right? Since we know the trade is 30 pips, we know that's 20 cents. Then we go 20 by 30, it's about 6. All right. All right, let's try another. Actually, let's make this interesting. As we're learning, we're going to see how we do it for our account. All right. So everything else from here, we're going to be taking real trades. I'm going to ask you a question, right? It's going to be a simple, like, guess a number between 1 and 5. If you guess the number correctly, you get take profit 1, right? Which is going to be 30 pips. If you get it wrong, you lose 30 pips. All right. We're going to see how we do. So this is us. We're starting Monday. All right. We got $200 on our account. We know our risk is $6. We know we're willing to take 3 trades and we're willing to lose. We're willing to lose 3 trades in a day and no more. So I'm going to give you 4 trades, right? I'm going to give you 4 trades. You can decide if you skip one or if you take it, right? And we're going to see how we do. All right, so here we go. The first trade, this is going to be 40 pips. The stop loss is 40 pips. Let me write it down in the chat so you guys can get it. So you see it in front of you. All right, so it doesn't matter what the pair is. Stop loss is 40 pips. Take profit, 40 pips. Take profit 1 is 40 pips. Take profit 2 is 60 pips. Okay. Oops. You don't have to say if you're taking it as yet. All right. I'm going to give you the 4. And when you have all 4, just imagine it as A, B, C, D. You could then write in the chat which 3 you're taking or which 2. You don't have to take all 3. All right. The goal here is that we end the day with 3% at least. If you do 3%, great. So if you, let's say you took only the first one and you happen to win that trade, awesome. You're good to go. All right. So trade number 1. All right. Trade number 2. We're going to call this learning by doing. All right. Trade number 3. And trade number 4. All right, so you go ahead, you pick, and then we can go through and do the whole calculation things together. All right, when you have your selections, just drop the numbers in the chat for me. And let me stop sharing here. As soon as you have the trades that you're taking, just drop what the letters are. If it's A, B, C, D, if it's A, C, if it's D, you go ahead, draw those in the chat. Come on, guys, don't be scared. All right, we're gonna go through the details of calculating together. So even if you just want to pick things and drop those in, that's completely fine. All right. BND seems to be people like BND. All right, cool. All right, I'll give you guys 2 more minutes. So at 7:45, we're gonna see where we're at. All right, one more minute. All right, 7:45. Awesome. Okay. Now, what I need you to do for those that submitted, or maybe you guys have it written down, I want you to put a number between 1 and 5. All right. So for if you chose A, whatever number you chose, just give me and write down the number between 1 and 5. Write that down in your book. All right. I'm gonna trust you with the answers. Once you have those numbers written down, type done in the chat. Just one number between 1 and 5. All right, perfect. So if you had 3 for A, you won that trade. Right? If you had 3, you got take profit 1. If you had 2, you hit stop loss. If you had 4, you broke even. Break even just means you didn't lose anything. All right. So for A, if you had 3, you got the trade. You won the trade. Whether you took take profit 1 or take profit 2, don't switch it now. If you know you had take profit 1, don't say you switch it to take profit 2 because you happen to have it. So if you had A 3, you win the trade. 2, stop loss. 4, break even. All right. B 2, you win the trade. 1, stop loss. 3, break even. All right. So for C, if you put 5, you win the trade. 4, you lost the trade. And I guess there's no break even here. I'm gonna put 1. 1 for break even on C. And D, if you chose 4, you won the trade. 3, you lost the trade. And 5, break even. All right. So from here, here's what you do. If you won the trade, that's going to be $6 for you. We're just going to keep it simple, just in the interest of time. If you put 1, I should have really put these as easier numbers. But anyway, if you won the trade, put it at $6. If you lost the trade, -6. All right. Won the trade, 6. Lost the trade, -6. Break even, 0. You go ahead, you add up. You add up and let me know how much money you ended up with. All right. So Carrie, let's see how many trades did you take? All right. So you took 2 trades and you ended up with -6. All right. So you got break even and you lost 1 trade. All right. Got you. Raquel. All right. Break even and lost 1. All right. So even if you didn't get a chance to write it in the chat, definitely make sure you have this in your book. All right. I know the way that we picked the who won or who lost was really, it wasn't true to the environment of trading, because obviously you would have made an educated decision rather than guessing. But this, I just wanted to get you guys into calculating. All right. So you guys can continue dropping things in the chat. So for the first trade, all right, we had that $200 account, right? We know that the stop loss was 40 pips. So if we had to do the calculation, it's going to be 6, the value of the risk. 1, lost 1, broke even, C. All right. So that would be $6, break even. So you're at 0. All right, cool. That's not a bad result, Tisha. It's not bad. All right, so let's go back here. So for A, right? So we had 40 pips. That's our stop loss. So if we were doing the calculation, that's going to be $6, right? It's going to be 6 over 40 multiplied by 10. So that's 6 over 400. Where's my app? 6 over 400. All right, 6 divided by 400. Now, this is where we're going to see that our numbers, what we thought we lost or thought we won, is going to be a little different. All right. So for the first trade with our $200 account, we would have been using a 0.01. Right. If you use your calculator, you should have gotten 0.015 for the lot size for A. All right. So A, your lot size would have been 0.01, which is fine. With that, you would have definitely, if you lost the trade, you would have lost minus $6, right? Because your lot size was, yeah, your lot size would have been that 0.01. Actually, you would have lost less than $6. All right. You would have lost less than, yeah, you would have lost less than $6 because you can't put a 0.015, right? It would have only been a 0.01. All right. So you would have been 10 cents for 40 pips, which means you would have lost $4 on that trade. Let me know if that was clear. Yeah. All right. So this is where we're going to start doing some adjustments. So if you lost A, you could put a little circle next to it or something and just put -4. You didn't lose 6, you just lost 4. Now, if you won that trade, it was 40 pips as well. So you would have gained $4. Not clear for you. All right, perfect. Let me share my screen. Let me see if I share my screen here. Yeah, I know this is the part that's a lot less fun. Zoom, not that. All right. So if you're looking at trade A, yes, right? So you're only dividing, you got 6 over 400, right? Which is giving you that 0.15. Because the formula for knowing what your lot size is going to be is your risk, right? Divided by your stop loss multiplied by 10. No, multiplying by 10? No, no, no. You're not. All right. So if you follow me on the screen for this particular case, our risk is $6. So we're going to put 6. We know our stop loss is 40, right? And it's 40 multiplied by 10, right? Which is where the 400 came from. Let me know if that works, Raquel. And Tisha, let me know if is that making it look clear? Was able to calculate a lot sizes? All right, just Follow me with what's on the screen so far. All right. So the calculation for how to calculate your risk is going to be how to calculate the lot size that you're going to be using is going to be your risk divided by the stop loss in pips multiplied by 10. Right. So the stop loss in pips multiplied by 10 is underneath, and then the risk is on top. All right. When we do this, we're going to end up with 0.015. All right. Yes, the $6 came from our risk per trade. All right, which let me put that on the screen too. Oops. All right. So this is what we did. Our risk per trade is $6. So when this came out and it was 40 pips, our risk was still $6. So we then had to work with our stop loss to figure out what lot size do we use to make sure that when we enter this trade, we only lose $6. All right. Some of these other ones is going to make more sense. All right. So I'll keep pushing forward. So the next one, B. For B, our stop loss was 20 pips instead of 40. Our take profit was 20 pips, and take profit two was 60 pips. All right. So with that, with this, let's get this back. All right. So our calculation is going to look like 6 because our risk doesn't change over 20 by 10. All right. And when we do that, 6 divided by 200, that should give us 0.03. Okay. So our lot size is different because our stop loss is a lot smaller. So our take profit one, that's going to be, remember, 0.03 lot size that has a value of 30 cents per pip. And I promise you, this just seems like overly complicated and way too many words today, but it's going to get easier. All right. This is 30 cents per pip, which means for take profit one, it's going to be 20 multiplied by 30 cents, which is $6. If we won this trade, you would get $6. If you went to take profit two, however, it's going to be 60 multiplied by 30 cents. All right, which is going to be what? $18? Type of AC if you follow me on that one. Are we good? K, are you still here? Let me know. Let me know if you're clear on that. All right, perfect. This is the point where you start making money. All right. I say you want to get take profit one at the very least. The reason being, take profit one, in order to get to two, you have to get one first. Right. So one is going to be the lowest risk. One is most likely to happen. Two, if it does happen, it would pay off better, but you got to wait for that to happen, right? It might not get there, right? Your trade might go up 50 pips and then turn around and then never gets to 60. All right. So that's where knowing what your exit is, that's where knowing what your target is going to be helpful. If you know at the very least you want to leave a trade with 3%, then when you see that your trade is up $7, $8, you know you passed three. So it's already good. It's great. All right. So let's see if we can get the other ones in. And then I will show you why I keep saying that 3% would change a lot for you. All right. So C was minus 30. Who took C? All right. Raquel took C. Did anyone who didn't write their stuff in the chat take C? Let me know. Because this one's going to be interesting. All right. So for this, we know that our risk is, actually, let me know. When you use the calculation, let me know what your, let me know what your lot size ended up being. Come on. Let me know. What should my lot size be? All right, 0.02. Fantastic. And how much money per pip is 0.2 worth? How many cents? I'm going to try to wrap this up. 5 pass, 10 pass at the very latest. 20 cents. All right. Now, here's the deal. As we send out those signals for you guys, right? We're going to try very hard to, one, make sure that take profit one is either equal to or a little bit more than your stop loss. And here's why. This trade is a perfect example why. Right here, your stop loss would be $6, right? You would lose $6 if you lost this trade. But with your take profit being 35 pips, instead, your take profit is going to be 35 by 20 cents, which is $7. All right. And your take profit two, if you happen to take that, would be 50 by 20 cents, which is now $10. All right. So if anyone took, which trade is this? This is C. If you took C, worst case scenario, you lose $6. If you went only for take profit take profit one, you would have made $7. All right. So now you're ahead. Your reward is better than your risk. All right. And finally, you guys mind if I change the numbers on D real quick? I just want to show you guys a better scenario than we have, right? So instead of it just being 20 pips for take profit one, I want to change it to 30. Okay. All right. So this is going to be 30. And then we're going to make take profit to 60. All right. So if anybody was working ahead, let me know what your lot size would be for this trade. Let me know the lot size and let me know the value of the lot size in cents. Remember, the risk didn't change. The risk is still 6.
Sorry, can you just repeat what you changed it to, please?
Oh, sorry. So right here on the screen, I changed the stop loss is still 15 minus 15 pips, right? Your risk is still 6. So it will be 6 divided by 15 multiplied by 10. Let me know what the lot size is. Yeah, 0.04. All right. And 0.04 in cents is equal to what? 40 cents. Perfect. So 40 cents, your stop loss, right? Is still going to be equal to minus $6. Your take profit one, however, right? It's 30 pips. So that is now 30 multiplied by 40 cents, which is $12. And then take profit two would have been $24. All right. So you guys saw we all had this $200 balance. Whenever the stop loss got small, our lot size went up. When the stop loss was 40, lot size was 0.1. When it was 20, 0.03. And when it was 15, 0.04. And when it was 30, 0.02. All right. So the lot sizes can change if your risk gets reduced, right? If the risk in pips gets smaller, our lot sizes gets to be bigger. The bigger the lot size, the more money you can make while the pips are moving, right? Because an example, where is it? In this one, 60 pips gave us $24. Whereas in this one, 60 pips only gave us, what did I give us? Was it 6? 0.01, $6. Yeah. So what I want you to take from this, right, as you're growing, the 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 amount of pips that you're able to get on a trade is not as important as having a smaller amount of risk. All right, 60 pips here was $6. 60 pips here was $24. All right, cool. Cool. I know we went through a whole lot of math. So we didn't really get to test the whole 200 thing. I would have to give you guys a lot more trades so that you can see how that worked out. But how could you do this in practice? If you wanted to do this in practice, honestly, one way you can go is go into the live trade signals chat, write down. Like you can keep the same example of having that $200 account and just go through the trades, right? You would have seen the traders would have let you know if it hit take profit one, if it hit take profit two. Just focus on the take profit one, right? But then also just practice doing the calculations because there's sometimes where actually let's do one. Let me share my screen once more. This is the last thing I'll do for you. But I want you to see when you get a trade that you can't take, what that looks like. Right? Because that can happen. So let's say the stop loss was, I don't know, 70 pips or something crazy. All right. So if your stop loss was 70 pips, take profit one was 40 pips, take profit two was 100 pips. We would never send out something like this. All right, but just bear with me for a second. So your risk is still 6. Stop loss is now 70 multiplied by 10, which means our calculation would have to be 6 divided by 700. All right, 6 divided by 700. And that gives us 0.0085. All right. We can't take this trade because we don't have a lot size. We don't have a mini lot, only goes as low as 0.01. Right? This is telling us we got to use an eighth of a cent. We can't take this trade. All right. With our account, we can't take this trade. Okay. Now, if we had a $400 account, right? $400 account, our risk would then be 12. Our 3% risk would then be 12, which means this is now 12 divided by 700. 12 divided by 700. 12 divided by is 12 divided by 700. All right. This then gives us a 0.017. Yeah. So by having a bigger balance, we then have more risk. Having more risk means that we can have a stop loss that's bigger, right? So I know it was a lot of math here, but this is something that is going to be critical. All right. We will give you the pips every single time we send it out, but this is what's happening behind the scenes. Ideally, you want a scenario where your take profit is, let's say, twice your stop loss. So if the stop loss is 20, take profit should be 40. Stop loss is 15, take profit is 30. That's an ideal scenario because in that case, when you win one trade, you need to lose two in order to get back to zero. All right. And that's what we call risk to reward. All right. So we call it risk to reward. And that's how you start to grow your account. All right. So we can start to wrap up here. I will pull up the thing that I was going to show you to let you know how just that 3% per day can be awesome for you. Actually, let me see if I can use the thing from Kai. But you can let me know if you had any questions. Was anything super unclear? Or is it, I mean, it's a little hazy, but you just need to practice. Go ahead, drop that in chat. Let me know. Need more practice. All right. Good stuff. All right. So let me show this and then we are out of here. All right. So this is the same thing we just did. All right. $200 account, 3% risk. What? What's going on here? All right. Hold on. Can I fix this quickly? Because this is crazy. Risk D2 by 3. Dollar. Oh boy. I am not the best at Excel. All right. Currency. In a second. All right. Okay. Cool. That works. Um, all right. So if we were using this growth chart, right? We're using this growth chart for your $200, 3% risk, right? That means you're losing $6. If you had a one-to-one, right? If take profit one was a one-to-one where it's equal to your stop loss, then you will make $6 on your trade. If it was 2-to-1, it'd be $12, 3-to-1, 18, right? This is what your account could look like as it is growing. Let's see. And this is if you won every single trade. So if we just stayed in this column right here, one-to-one, in let's see, 90 days, right? In 90 days, your $200 could turn into 2,400, roughly 24. If every trade that you took was a 1 to 2 instead of 24, you're looking at 26K. If every single trade was a 1 to 3, then you're looking at $250,000. Okay. Now I know these numbers are wild, but that's what really you have within this space, right? You have the opportunity to kind of grow your account this way, but obviously it's going to take practice. It's going to take understanding. You're going to be winning. You're going to be losing. But this is just goes to show you if the types of trades are 1 to 1 in 18 days, where you will be at. Yeah. So this is in the main chat. It's pinned so that you'll be able to grab it from there. Whether you put it on your phone or if you got to download it, put it on your. Wait, am I sharing my screen? Are you guys seeing the spreadsheet? Or am I sharing something completely else? Okay, cool. All right, perfecto. All right, so with that being said, hope you guys got some value with this. You found some stuff that's useful, and just keep practicing, man. All right, feel free when a trade comes out, right? Even if you don't take it, you can ask a question based on what we went through. Like, Kurt, all right, so my account balance is actually $300. The risk I'm using is 2% instead of 3. If I took this trade, would it be correct for me to use X lot size, right? Or you can go into your MetaTrader app, right? Do all the calculation on your book and just put the numbers where they're supposed to be and send that screenshot in the chat, right? You could put a caption of my balance is $500. Is this lot size correct? Right? You don't have to actually take it, but you just want to be confident that when a trade comes out, that you're using the correct lot size, right? Because you can easily make a mistake that could just damage your account. All right. So just take your time with it. And I continue to see you guys growing, man. It's going to be a great time. All right. So with that being said, we are done, Zo. We are out of here. Looking forward to those questions. Looking forward to those screenshots. And yeah, just keep going through the academy and definitely leverage us. All right. I want to see some questions in the chat. I want to be like, oh my gosh, people are asking too many questions. All right. Cool. All right. Cool. Appreciate it. Appreciate it. Love to see it. All right, guys. Have a great night.